and Dow hitting session highs at this moment. Let's get the next key levels to watch from Jason Hunter. He is head of technical strategy at JPMorgan. It's good to see you again. I'm reading these notes and I'm like, man, Jason's negative on the market. 3,500 is your medium-term target, so we're going down 15% on the S&P from here?
Yeah, so that's over the medium term and likely a first half target for next year. Over the near term, we've been talking about this 40-50 area as the base case target zone for the fourth quarter. And while we've closed most of that gap from where the market peaked out at 4,600 during the summer, even as we approach it, we're hesitant to put money to work just yet, for a couple of key reasons. Sentiment's not quite extreme just yet, and the relationship between price and sentiment tends to be a progressive one. So a lot of damage could happen in price to finish off that sentiment number. And we just don't see the typical patterns that you'd see at the high frequency level to suggest the market's basing just yet.
Sentiment is pretty bad, though, isn't it? I mean, it's hard to find a lot of people who are bullish. Even the bulls seem to be wavering. Like Yardeni I had on earlier is like, well, we probably won't make back what we lost between now and the end of the year.
Yeah, like I said, there's a couple of surveys that we look at, and when you look at the price action versus those readings, like I said, it's getting close, but that last step often could be a doozy. And not to mention the NASDAQ and the big cap FANG, the Magnificent Seven, they're just starting to threaten and break support now. That's where individuals are crowded. We just want to see if that break, as it progresses, if that could lead to a crescendo-type selling event that ultimately causes the S&P to overshoot what our fourth quarter target was. At that point, we think you'll start to set up for a fourth quarter bounce, a bounce in a bear market. Like I said, the medium term is still negative. But we think, given the view it's longer term, it's bearish. We want to be very selective and careful about where we would suggest clients deploy capital or take hedges off.
I mean, the danger in the charts, of course, and, looking back at history for that matter, is that it sometimes just doesn't match up. Many things about this current cycle have been out of the ordinary and haven't matched, from historical standards. For example, going back to the October bottom, it's not like we had a crescendo of selling, that last moment of capitulation that got us there. It was sort of a drip and a drip and a drip and a drip. And then just when you thought we were going to be even more in trouble, the market rallied back to some degree. It's been a confounding market in many respects.
Yeah, but what was consistent then, even when we go back to that 3,500 bottom last October, if you look at our notes then, a number of our systematic pattern recognition signals triggered at that point. Sentiment did get extremely bearish. So there were consistencies with past bottoms that led us to actually get bullish on that reversal.
Megacaps, how much does the market need them right now? What does last week's trade tell you, if anything, as those stocks are rallying, trying to rally back?
Yeah, I think, you're seeing some of them have broke support, some haven't, some have, benefited from good earnings numbers. With the NASDAQ trading where it is, it's really in a dangerous spot because you're right at the spring-summer range lows. And if you look at how, let's start the AI theme that led to that pretty explosive rally, where a lot of the FANG names or Magnificent Seven are somewhat linked to that AI rally. My guess is a lot of the longs bought in after the fact during the summer months and not before. So if you start to trade below those lows, even the best buying you could have done this summer, those individuals are going to be underwater. That's, like I said, we want to be very careful because if you start to see wholesale selling from that very thin group, given its cap weighting and even something like the S&P 500, you could take the S&P from where we think it could bottom at 4050 down to 3900 fairly quickly if you see those particular stocks break.
I mean, that's the danger in momentum buying, right? You're not there. You see a bunch of momentum. You get on the train, and the train's about to run out of steam. And I guess a segue to the Russell off of that. You say that the small caps have already achieved your downside objective. Now, some might take that as a contrarian indicator to say, okay, maybe the worst is over. Maybe the economy actually is going to hang in there well enough, and that small caps now are a buy. Are you suggesting that they're not?
I would think in relative terms, maybe. The fact that they're at the levels they're at, if I just look at the Russell 2000 in isolation, even with the cross-market dynamics and curve inversion, I am tempted to look for that bottom pattern on the Russell. Not quite there yet, but this is where I expect it to form. The problem is, if you're going to see that type of sharp selling in mega cap, it's hard to imagine that small cap's not going to come under pressure as well. So even then, it makes me hesitant in absolute terms to look at the Russell as a long. But in relative terms, it's starting to look attractive relative to the mega cap group.
You think yields have peaked? I mean, we're going to get the issuance announcement on Wednesday. We've got the Fed decision the same day, jobs on Friday. Where are we on those?
Yeah, so about a week and a half ago, we published a note, the same idea where we look at systematic signaling. We've got a handful of pattern-based algorithms that identify, trends in the market that give you asymmetric risk reward versus random entry. And a week and a half ago, those suggested starting to buy treasuries. So we did suggest a long in the 5-year note. We do think that looks like a peak. If we're right on the equity call, and equities do come under acute pressure here, if you do see that aggressive selling in Megacap, that's only, I think, going to help. You're going to break the bond stock correlation. And in our view, that'll confirm the more durable bullish reversal in the bond market. But for right now, the technical signals are there, and we're acting upon it.
Jason, we'll talk to you soon. I appreciate it so very much. Jason Hunter joining us from JPMorgan.